Mercado Libre stock is down 24% in the past 6 months, and in this video I want to explain why I have taken this as a great opportunity to buy the company and why I believe the company has a lot of upside potential. The current market cap is $89 billion and they've generated $28 billion in revenue, up 39% year over year. Their net income is currently at $2 billion, up 4.5%. Although this is a company that has a lot more free cash flow, currently at $10 billion, they are currently trading at a 4P of 31. Although I'll talk later more in depth about the valuation with the discounted cash flow model, and I'll show why I believe the company is heavily discounted. In fact, the current price to free cash flow is 8, and analysts are rating it as a strong buy with 57% upside. The main reason why the stock has been falling in price is because of their last earnings. However, if we take a look at them, they were amazing. Net revenues and financial income of $8.7 billion, up 45% year over year. So this company's growth is insane at the moment. Income from operations of $889 million with a 10.1% margin. Net income of $559 million with a 6.4% margin. Total payment volume of $83.7 billion, or 42% year over year, because just in case you don't know Mercado Libre, they are sort of the Amazon of Latin America, but they also have a very strong fintech business model. Also, gross merchandise volume of $19.9 billion, up 36.8% year over year. And Mercado Libre has seen insane revenue growth in the past decade, growing from $651 million to $28.8 billion currently. And you can just see how insane these growth percentages are. 39% last year, 37%, 43%, 49%, 77%. So Mercado Libre's revenue growth is just insane. And if we take a look at the revenue by geography, we can see that they have accelerated revenue growth in every single country. For example, in Brazil, they grew 48% this quarter compared to 38% the previous quarter. In Mexico, 56% compared to the 44%. The only place is Argentina, while they grew 23% instead of the 39% compared to last quarter. The e-commerce segment has grown at 40% compared to 33% last quarter, and where they have seen a lot of growth in the past year is in the fintech space. As you can see, 51% growth, and if we compare it to last year, 29%, and in total, Mercado Libre grew 45%, which is insane revenue growth, compared to the 37% last quarter. In terms of gross merchandise volume, Brazil grew 46% compared to the 36% last quarter, and Mexico 49% compared to the 36% last quarter. And in total, gross merchandising volume grew at 37% compared to 28% last quarter. Also, total payment volume grew 42%. So Mercado Libre is growing in every single segment, in every single region, except for Argentina. Their fundamentals are getting better and better. And they have another segment that is growing very rapidly, which is the advertising segment. In the last quarter, they said revenue growth accelerated through the year, culminating in FX neutral growth of 67% year over year in Q4 2025, 70% in USD. They said search ads grew strongly and remained the primary source of advertisement revenue. But now let's talk about their profit, because this is the aspect of the company that I believe is misunderstood. They are currently generating $2 billion in net income, as you can see here, which looks small compared to the $28 billion they are generating in revenue. Now they are generating tons of more free cash flow, currently at $10 billion, and their margins have shrunk in the past couple of years. Their gross margin is now at 44%, profit margin at 6%, and free cash flow margin currently at 37%. So why is this happening? Well, because they are spending a lot of money reinvesting in the company. And this slide is extremely important to understand the long-term vision of the company. They said, we prioritize investments that are most synergistic with our ecosystem and either deepen existing moats or create new ones. We do not solve for short-term margin optimization. Our investment plan for 2026 will be consistent with this bold and disciplined approach to investing behind long-term growth. They added, "We are conscious that the early-stage nature of these strategic investments puts pressure on our income from operations margin in the short term. We estimate the combined effect of our strategic investments, which include the lower free shipping threshold in Brazil, CBT, 1P, and the credit card, was equivalent to 5-6 percentage points of operating margin in Q4 2025. These investments are driving tremendous growth and helping us to strengthen our leadership position across our markets. This is key to understanding the business. They are spending a lot of money on themselves and they are getting insane results, as we have seen on the growth percentages. Now, despite that, they are still generating tons of free cash flow. This is something actually Amazon has done for a long time. They were reinvesting back in the business because they were getting a huge return doing that. So I really like that Mercado Libre is doing the same thing. Mercado Libre is also in a great financial position. They have a good balance sheet with $6 billion in cash and $11 billion in debt. So they still have a lot of cash to pay down that debt and again reinvest in the business. Now let's talk about the valuation. By the way, if you want access to where I've shown all the stock data in this video, you have my link to stockanalysis.com in the description. Now the company is trading at a P/E ratio of 44. But again, we have seen that this is short term because they are spending tons of their profit. So in order to take a deeper look and a long-term vision about the valuation, I use my Google Sheet. This tells me what returns you would get on the company if you buy the stock at today's price, which is 1770. And as you can see, according to my low assumptions, you would get an 11% annual return on your money, middle 21.1%, and high 30.9%. Now, if you want to calculate intrinsic value, I like to put a 10% annual return. Why? The reason is because the market usually gives you around 10% when you invest in the long term. So the same thing with companies. But if you decide to invest in an individual stock, you should desire a higher return. And as we have seen with the returns, are insane with Mercado Libre, also considering how conservative my assumptions were. I mean, I did a 7-year analysis and I assume they grow revenue between 8 and 16%. They are currently doing 30+%. I assume the profit margin and free cash flow margin between 16 and 24% because I do believe margins are going to improve in the long term. And I assigned the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to share with you the spreadsheet if you decide to become a member, and you can use this tool for any stock you want. I did Mercado Libre, but you can do any one you want. You'll also get a tutorial on how to use it as well because I've done all the calculations in the background, so it's super simple to use. And I'm also going to post exclusive content. So if you are a value investor and if you're interested in more content, become a member. And just to summarize really quick, I believe Mercado Libre is an undervalued company that has a lot of growth potential and also really helps to diversify your portfolio. I mean, I do own US stocks. If you follow the channel, you know I own Adobe or PayPal or even Pinterest. But I do think it's great to own some international stocks because of how overvalued the US stock market is. I also own JD.com, which is a Chinese company that I also believe is undervalued and adds diversification to the portfolio. I hope you found this video valuable. Let me know what you think about Mercado Libre stock in the comments, and I'll see you in the next one.